more than anything is getting these things wrong. It's very hard for the first one to get it right. But this is, I mean, it's a brave new world.
That's powerful. What, you know, one of the things that maybe the direct question of what we're all kind of talking about here is where do we go for mass adoption? Is it a use case? Is it education? How does that happen? You know, our founder, Ryan Poole, he said that one of the things that he really looked into is when he studied projects that were successful, it's what projects got the most tokens into the most hands early on.
On the security tokens, I'll just break down a couple of them because they're not going to be in 1 year, but now is the time to be doing them. The equity sides are clearly a core component of this. I mean, take the world's stock markets. They're local by design, maybe in big markets, but they're local by design. They run from 9 to 5 on weekdays, and they run on really slow, insecure, antiquated, expensive technology versus running on global systems that run 24/7 by 365 on the most efficient, secure technology the world has ever seen.
It's real time.
That's where the stock markets are going. That doesn't mean that NASDAQ might not be a player in the future. Clearly, they're heavily invested because they have already agreed with that thesis. Most of the smart exchanges around the world have, meaning the main ones, and a couple of small ones. The Toronto Stock Exchange is doing a good job, the Australian Stock Exchange, but really the US exchanges are the ones that recognize the future that I just articulated. They know that their current business is going the way of the dodo, therefore they're making sure that they've hedged their bets and they're invested to catch this next wave, and hopefully they intend to be successful participants in it. Real estate is another incredible one.
Real estate's the biggest.
The real estate market is interesting. As venture capitalists, startups get the valuations they get because of what you'd call a liquidity discount, because it's illiquid, because your money is going to be locked up for 10 to 15 years. And when your money is going to be locked up for 5 to 15 years, you eliminate over 90, maybe 99% of potential investors. Most people cannot have a financial plan that looks that far out into the future, and so you eliminate everyone as a potential investor due to the lack of liquidity. And therefore, the price of an asset is substantially lower as a result of that. That's why when companies went to do ICOs, they're like, oh, look at how my price is here. Or the same thing between private to public company arbitrage. The same thing is true there. Real estate is an illiquid asset. I mean, you can put it on the market, you can sell it, it moves, if you need to sell it, just like stock. If you need to sell it in a year, at the right price, you'll be able to move that asset as long as it's got some value, or at least someone else believes it does. As you begin to tokenize real estate and fractionalize real estate, where you could say, I want to put $1,000 into residential real estate in South Beach, or I want to put $1,000 into commercial real estate in South Beach, and it's just you're buying a dollar in 1,000 different properties. As you can start to buy zip codes and categories and however it is you want. Wait till the algo guys and the hedge fund traders start to apply to these sorts of markets. As this stuff becomes tokenized, I think real estate prices are going to probably at least double, because you're going to start to close the gap on that liquidity discount. As real estate becomes a truly liquid asset, as everything becomes a liquid asset.
And what's really important about this is this actually creates a more stable global macro economy. When everything is tradable in real time, all the time, and you can maximize participants because virtually anyone can participate, all of a sudden you have stability because you have all these less illiquid assets. Illiquid assets are the bane of capital markets. Once you make everything liquid and tradable all the time,
it's more efficient.
It's much more efficient, especially when you're talking about these massive quant funds that can deploy tens of billions or hundreds of billions of dollars across all sorts of capital markets. You actually create much more stable global economy. It's perhaps the most exciting development in crypto that no one's really talking about because it's so big and it's a long-term vision.
No,
It's
it'll take years.
a
But
decade minimum.
the platform winners, though, and the precedent-setting transactions are already starting to happen now.
Yeah.
You know, and that adoption might come faster than people realize because of the same economic incentive that made Bitcoin interesting. If my thesis is correct, that adding liquidity to the market will create appreciation in the underlying asset, that means if you have a $100,000 house or a $1 million house, it'll probably cost you $2,000, $3,000, $4,000, $5,000 to tokenize it because you're going to have to update title and all the things and that'll come with it. But when that happens, if your house goes from $1 million to $2 million, or $100,000 to $200,000, and it costs you $5,000 to make the, call it migration from a paper title to a digital fractionalized titling system, that's a strong economic incentive. When people start to realize that the amount of value they can unlock in what is, for at least most Americans, their primary asset, you could see this actually happen quite quickly because it won't require us, the entrepreneurs. Once the platform is built, you've created an economic incentive where there's so much value there to be unlocked for homeowners across the country, or people that don't own homes that see the opportunity, kind of like in 2005, 6, and 7, where they can rush out and borrow money to get access to a property to then unlock value in it. The economic incentive is so big that it could come a lot faster. It might not take 10 years. I'd predict 10.
Yeah.
But the economic incentive is such that this could come much faster, at least in where you see huge numbers happening because the incentive is so big.
It's interesting, and we talk about this in some of our meetings.